Before we go into the liability allocation problems, I just want to stress one concept. So this is my S corporation costume. S corporation stands for small business corporation. Now, when it comes to tax, specifically entity tax, a lot of these concepts, you're going to have to compare and contrast the different types of entities and the consequences to the entities. So right now, at the time of this video, the big three in terms of choice of entity: C corporation, S corporation, LLC. Now, C corporation is almost always eliminated because of double taxation. However, there are cases where it makes sense to be a C corporation, whether it's a financing issue or some other element or timing. So usually it ends up being between S corporation, small business corporation, and LLC. Now, S corporation, small business corporation, is meant to be for small businesses, and if you're taking a corporate tax class or S corporation tax class, you learn about those elements that make a small business, like a limit on number of owners. You can only have one class of stock. You can't have preferred and common, those types of issues. Certain eligible owners, you can't have a partnership owning an S corporation. You can't have foreign people owning an S corporation, things like that. LLC is a little more open, but let's just say that that's fine, that an entity can be an S corporation or can be an LLC. Okay, you have a few owners, it can be an S corporation or LLC. There are different advantages and disadvantages. One main advantage of being an S corporation at the time of this video over an LLC deals with self-employment tax. Less income generally is subject to self-employment tax in most cases. Not all cases, but most cases. There are many benefits of being an LLC over an S corporation. One main one is the Section 721 formation and contribution rule that we learned in an earlier topic versus the S corporation and C corporation corollary of Section 351. I mentioned that in that topic, how it's a lot better to be a partnership because there's no control requirement. It's simply just transfer of property for ownership. Doesn't matter what the ownership is. Boom, no gain or loss recognized. With S corporations and C corporations, you have to do it as part of a transaction, the transferor or transferor group of 80% or more, which is control. Okay, so it's a little more difficult to get that non-recognition rule. Another big element deals with liabilities. If the entity takes on a liability when in partnership tax land, subchapter K, under section 752 and 705 and other various mechanism rules, the liability, that's the economic risk of loss with respect to a partner that bears it, right, recourse versus non-recourse, they get to put that into their outside basis. That's very, very big because when we're going to talk about distributions later on, you can take cash distributions up to your basis and that be tax-free. I mean, it's going to lower your basis, but they're tax-free, which is big on time value of money. And that's a big benefit. Compared to S corporations, if the entity takes on a liability, it does not get allocated to the owners. It's stuck with the S corporation because the way that corporate law works, how it's a separate legal entity. Okay, so this is a huge benefit for partnerships over other business entity forms. And by partnership, I mean entities taxed as partnerships, so LLCs, LLPs, general partnerships, limited partnerships. Okay, anything taxed as a partnership versus anything taxed as an S corporation. S corporation, the owners do not get to allocate the entity's S corporation liabilities. Those are separate. Now, there are some special circumstances where if an owner lends money to the actual S corporation, they can put it in their basis, but then you have to keep the stock basis and the liability basis separate. For a partnership, you allocate the liabilities under the ideas we just talked about. You do that to the actual owners, among or between the owners. Okay, that's a huge benefit, again, because that increases your basis and that allows things for distributions, sales of partnership interest, all sorts of things. All right, so now let's go into some problems where we can apply the rules. Again, keep this idea in mind, this S corporation partnership, and it's so important because, again, this is a big benefit of partnerships over other entity forms. So, again, those problems will help you understand the rules you've learned before and how everything fits together, better applying those rules, 752 and others. All right, so go ahead and get to those problems.